I think Steve is spot on. I mean, Fed Chair Powell made it very clear that there are a lot of challenges ahead for the economy, and gave an outlook that was still quite concerning. Look, we can have an initial bounce, but then, certainly there could be problems thereafter.
Michelle, I wanted to ask what you thought the chances were that inflation could surprise to the upside. I mean, clearly they've committed, or in their forecast at the moment, to low rates for a long time. But you look at the money supply growth over the last couple of months. Is it possible inflation could surprise to the upside?
You know, it's really quite interesting. That was one of the key takeaways to me from the Fed today, is that the Fed is very convinced that there's going to be a disinflationary environment for some time. I mean, look at the S&P forecasts below 2% through the forecast horizon. The way that Chair Powell talks about the inflation backdrop with slack remaining in the labor market. And even when you get to full employment, it's not obvious that that will be sufficient to generate higher wages and higher price pressures. So yes, there's a lot of stimulus that's pumping in through the economy, both on the fiscal side and on the monetary side. But there are a lot of things that need to happen in order for that stimulus to become inflationary. You need to have a Phillips curve that's active. You need to have wages that are picking up. And I think that Powell communicated very clearly that they are not going to be convinced that there is an inflationary push, that there's a trend high of inflation until they see it. Just an unemployment rate that's below target is not sufficient condition to believe that there will be higher inflation.
Well, they're clearly not looking at the at-home inflation, the grocery numbers, which today showed a big, sharp rise. Again, Kourtney, investor playbook here. Do you do anything differently as a result of what you heard from Fed Chair Powell?
Well, for me personally, and for many of our clients at Loop Capital Markets, we're very much focused on, and I'm focused on, the long term. And candidly, I want to start with the fact that I do think Fed Chairman Powell is doing an incredible job navigating through these unprecedented times. And I think it's worth noting that he is being very cautious as it relates to his comments. And we need to be able to appreciate that, because ultimately we're in a situation where you can't have people thinking that it's going to be rosy down the road. I mean, there's a reason why interest rates, he said, will be kept low. And not only that, he said, I'm not even thinking about raising rates. So that should tell you something. So as investors, I think right now you have to have a view. And this is the stock market, and you have to decide, okay, am I willing to lose? And if I'm not willing to lose, should I be playing? And, we're seeing a lot of retail investors now getting involved. We've seen the spike in whether it's the E-Trades of the world and even via Cash App that people can now invest. We have to be very, very careful as it relates to the messaging that we're providing to regular retail investors, let alone, our high-end institutional investors that know what they're doing. We have to protect our people that are out there right now that are saying, oh, the stock market does nothing but go up, because we all know that that's not true. And so, I thought it was very prudent of Fed Chairman Powell to outline the potential risks and potential problems that we may see as we move forward here. Possible resurgence. We're seeing 21 states with COVID now spiking again. I mean, you cannot ignore the reason why he's saying he's going to keep rates low. So I think the bottom line is, in a nutshell, if you have an investment philosophy, stick with it, remain diversified, and understand your risk tolerance.